Liebe Zuschauer, herzlich willkommen zu Inside Wall Street aus dem Studio der New York Stock Exchange. Ich bin Manuel Koch und bei mir ist Doreen Mogavero von Mogavero Lee Co. Thank you for joining us today.
Thank you for inviting me. Very nice to be here.
The January is over and it was a pretty good start into this year. What do you make out of this?
Well, it was a very good start. In fact, it's the best January that we've seen in the Dow Jones Industrial and the S&P in many, many years. There is sort of an old adage on Wall Street that as January goes, so goes the year. So I think people are very optimistic that we've gotten off to a good start, and hopefully we will be able to maintain that momentum.
So the 1,400 points were close for the Dow Jones. Do you think we will see it soon, or is that maybe a thing?
Well, I think we'll see it sooner than later. I do. I think the momentum clearly is to the upside in the market. Many technicians are feeling that we are a little bit frothy up in here, and that perhaps we'll see a correction. So I wouldn't be surprised to see a small correction at some point in time. You know, nothing goes up forever in a straight line. But I do think for the most part, the people, retail investors, seem to be back a little bit, which to some signals, again, another top in the market. But I do think that even if we get a correction, it won't be huge. You know, I don't think it'll be really a 20% correction or anything like that, maybe a small 5%. And we should be off to the races again.
What was more important at the moment, like the economic data or the earnings season?
Well, I think earnings season probably in terms of stocks at the end of the day will be more important. In my view, I think that a lot of the economic data relative to the stock market seems to be a disconnect. You know, I don't think the economic data in the United States is really what's pushing the market. It's really still not very good. I mean, it's stabilized to some degree, but still, and I think everyone will agree, we have a long way to go in this country until we see a very sustainable recovery. This has kind of been, we had a bad GDP number, which is being debated right now, but we've had some disappointing initial jobless claims today. Mortgage applications were off during the week. So I think we still, the key points, housing and job markets, still need to be a little bit more solid for us to feel confident about the economy. But the stock market, relative to that, seems to be performing brilliantly. So you'd have to believe that it's more about how much money the companies can make in profits versus the United States economy. So as we become more global, obviously there's a disconnect there.
Do you think the worst part is behind us for the earnings, or?
Well, I think they'll probably be mixed, and I think for at least a year or so, most traders are feeling that, you know, the market is, you're picking your stocks if you're trading the stock market, no more picking sectors and things like that. For most of them, they want to pick stocks. So to that point, you know, if you're making money, you'll probably have a good run.
How do you can make money in these times?
Well, I think if I knew that, I would be not here. Well, I think you can make money by doing your homework, obviously, and finding out which stocks are really performing well. It seems to be that across the board, companies seem to be very lean, a lot of cash on the balance sheets. And the question is, you know, what are those companies going to do? And that's why most people are watching the guidance, not so much. You know, earnings are backward-looking, and the guidance obviously is forward-looking. Stock market is forward-looking indicators. So we're really paying a lot of attention to what CEOs and CFOs are saying they see in the future.
We saw the Fed on Wednesday, and they are still a bit concerned about the unemployment in this country. So do you think it's right to have all these programs to put so much money into the market?
Well, that's a political question. I would have to say that I think it would appear that the Fed buying has sort of stabilized the market and kept us from going lower. But on the other hand, it creates another problem out into the future. So, you know, I think if you look statistically at countries that have used this sort of monetary policy to prop up their economy, it's a very long process. If you look at Japan, I mean, you look at some of the others, they're still reeling from some of the things that were done 30 years ago. So I think to that point, it's going to take us a very long time to unwind. We've not really seen an exit plan.
We also saw, and you also mentioned it already, the GDP. It was a pulling back, surprisingly. Is this the reason because of we saw so much political things going on in Washington, D.C.?
No, actually, I think from what most economists were saying yesterday, GDP came in at a negative number because the government stopped spending money on defense, so the defense number was less. But then the argument is we're glad they're not spending that much money, but, is that the place to be cutting? The arguments in Congress will go on forever as to how to attack the sequester, but I think...
But I think they also cut it because of the fiscal cliff and, so all these things have to do with each other. What would you expect now, a better quarter one for this year?
Well, I think for who are we talking a better quarter? In general for the stock market, in general for the S&P 500? If that's the case, I think that most people would agree that the stocks are pretty solid at this point, and they look to be a very cheap investment relative to other things if you look at PE. There's a great thought across the street with research people that there'll be an asset reallocation from bonds into equities. So I think there's a lot of things going on in the equities market that have not been going on for the last several years.
So at the moment, it's the right time to buy, to go into the market?
Well, I'm a trader. I'm probably not the right person to ask that question to, because traders have a much shorter perspective than do investors, and they look to take opportune times to get in and get out of the market fairly quickly. So I think the average investor has to look at their own time horizon and see what's right for them, before they decide whether to get in or out.
All right. Thank you so much. I appreciate your time, Doreen Mogavero von Mogavero, Lee & Co. Und liebe Zuschauer, Ihnen Dankeschön fürs Zuschauen. Wir sehen uns bald wieder hier aus dem Studio der New York Stock Exchange.